Hello guys, sound check again. Just confirming that this is still working. Thank you, admin. All right, folks. Welcome to Hey Pan and Fire. Um, I can say that I'm well, though a bit exhausted. Guys, welcome to another webinar on the ECB's decision or rate announcement. Now, I would have loved to tell you folks that today is a big day. I would have loved to tell you folks that this is really a very critical moment for the market. But I wish it were that pan and fire. Just busy with a lot of things, market and some management stuff. Anyway, so where were we? We were saying that I would have loved to tell you guys that this is going to be a very active session. This is going to be a very nice time for players, a seminal moment for the Euro. Unfortunately, I am not in a position to say this. Okay, um, we've had a month, slightly more than a month, since the start of the Eurozone's own QE program. And if we look at your Euro, it doesn't really seem that we've actually had any big sell-off because of this money printing scheme. Okay, it looks to me like we are approximately around the same areas. So one of the big questions for many would be, has there actually been an impact from the QE program, from this bond buying program of the ECB? Well, if you talk to bond traders, their reply would be certainly there has been an impact. Okay, um, your bond yields in the eurozone has really gone down. Remember that the ECB is printing money to buy 60 billion euros worth of bonds, and if the central bank is using freshly minted money to buy the bonds from its previous holders, because they're doing this purchases through the secondary market, what happens? People who owned those bonds before will now be holding instead a lot of cash. And that a lot of cash in turn gets used to do other things. So maybe some of the fund managers that did deals with the ECB reinvested those in more bonds, which is why we've already begun to see another round of decline in bond yields for the Eurozone, despite all the problems that's coming out of Greece. Now, other impact of this, we can certainly argue that your bond buying program by the ECB has, well, generally speaking, if the bond yield is going down, then the face value or the price of your bond actually goes up. There's that inverse relationship there. So your bond should have gone up, even as the returns for having them would be going down. That's your textbook relationship there. So, um, As we were saying, the stock market is up, but what about the currency? Have we done anything substantial over that period? And unfortunately, my answer would have to be not really. Okay? My answer would have to be we are really little changed from where we were. We just adjusted our consolidation area a bit lower. All right. So if that's the case, what are we supposed to watch out for the decision? Basically nothing as far as interest rates are concerned. Um, During the press conference, of course, Draghi will be there. And what do we ask for? What do we watch out as far as Mario Draghi is concerned? Well, guys, we've already spoken about the immediate impact of Mario Draghi's actions of his bond buying program. Um, a lot of people certainly think that pen and fire, and I'm also one of those people that think that's the case. So I'd agree with you on that. But for me, it's still important to know why is this so? What's causing it? So that if things begin to change, if conditions on the ground begin to change, you're able to quickly assimilate and identify what's causing it and come up with some form of remedy. Well, let's see our Euro charts later. So, guys, um, while we don't expect anything as far as the rate action is concerned, the press conference itself could give you some small volatility. Emphasis on the term small, because what are we expecting out of the press conference? Mario Draghi will be reporting on the impact so far of QE. He can't really report in terms of QE's impact on business activity. He can't do that. Yeah, he can't do that yet. He can't really just say that, yeah, our bond buying program is allowing the economy to run faster. Okay, typically there's a delay before the man on the street, before brick and mortar businesses experience the benefits that accrue from policy changes. Normally, you'll have the banks benefiting out of central bank decisions first. Any changes in policy would affect the banking system first. Well, pan and fire. There's a lot of thesis that that's a risk that the eurozone's facing. But let's compare the eurozone and Japan's scenario. Okay, um, Japan's quantitative easing efforts really comes in an environment where there's a very high savings rate, when there's a population that you know actually welcomes or that's actually more inclined to save money. Whereas you go eurozone and the culture's completely different. You've got a lot of, I would say, you have a lot of immigrants for one. Now, if you're asking me, what the heck does having immigrants um, what would the impact of having, what's the relationship of having immigrants with monetary policy is? Well, let's put it this way. Immigrants provide a potential game changer. They are a resource that Eurozone countries can, if the political will is there, harness. So in short, um, the backdrop is a bit different. The policy action is the same, but the backdrop in which these actions are being taken is completely different. Another scenario, another issue is you have a growing sentiment within the Eurozone that's really calling for measures to prime the economy, that's calling for social welfare to return, okay? Or prioritizing social welfare interests. So that's another consideration that is not really all that present in Japan's case. So while it looks very much different, I would say there are stark difference, or rather, while the policy action is looks very much the same, they're all buying government bonds. They're also buying corporate bonds, both the BOJ and the ECB. The environment where this is happening is completely different. And you're right, there's also that component to think about. Your net importers, exporters, import-export data. So I would say Japan probably has it actually a little easier in terms of balancing all the interests involved. All right, let's take a look at the charts though, guys. So as we said, don't expect too much. We will hear Mario Draghi talk about the benefits of the ECB's QE. But we tend to think man on the street will only experience it still a few months further. Now, that said, what are we supposed to do with our euro? If we're saying that the catalyst for weakness may not be there, should we actually think about buying this, picking it up? Or are we still going to continue that bear trend in our euro? If I were to look at, say, indicators, I would say you've got mixed signals. If I were to look at your candlesticks, the same would trigger, because we ended up with almost a bullish engulfing in our daily euro charts. So what do we do? If this rate decision wouldn't really be that critical for us, if what Draghi will be reporting will be offset as well, I would say if you're trading, just stick to the technicals. And what is the technicals telling us? I look at your EURUSD and I'm thinking, big picture, where do we stand? If I were to look at the monthly chart, I'd still say, hey, looks like we remain pretty bearish. Although there have been previous calls for some form of correction to happen. If I were to go weeklies, what were I to say? We've had a big sell-off last week. We are in the middle of the range for this week. So what's the argument here, folks? I'd love to consider the sell side of your euro. I don't think that there's that much ground for bouncing up, but you give me better prices, you give me good prices. Take me to about 23.6 level, your 107.15 area. Take me to your 21-day EMA at 107.73 region. And at that point, you will find me an interested participant, an interested seller for your euro. Hey, Arvind, well, I'm not really a harmonics person. So I cannot quickly identify your, oh, I can quickly identify your Gartley pattern. However, from the Fundi perspective, I just don't see how we could reverse the losses that we've seen over the past couple of months. Jen, I'm looking at 107.15 as a potential sell area. Anytime we push to that level, whether you're talking today or the next couple of days, that will always be a good place to sell from. And then another good place to sell from would be 107.73, 21-day EMA. Now that's on the daily scale. What if you're trading intraday? What would be a good place for you to short? Let's see your charts. So intraday, we actually spent the Asian session consolidating around your daily pivot. Eventually, we cleared, or rather we stayed well under that daily pivot. So one of the strategies that I would emphasize on an intraday scale would be to try taking the sell side of your pivot from the, or rather, try to take the sell side of your euro from the daily pivot, right around your 106.31 area. So at this point, folks, on an intraday scale, I'd really rather not do anything, but if I have to, my bias would be on to try taking the sell side of your euro, coming off your 106.31 daily pivot. What else would it be a good place for us to consider selling it? If not 106.31, then I would say yesterday's highs, just short of it. Your 107 area would make such a good rejection point. What's the best pair to for euro? Dollar? Unfortunately, I don't have a gold euro chart in this platform, but let me see my other platform because I'm also excited about that potential. Dumping your XAUEUR, your euro gold. Let me just find a chart for it. You are. You go. Isaiah, there's a lot of reason to say that that area is strong. You look at your chart and you'll see that it's 23.60 retracement, or roughly 23.60 retracement of the drop from February. That also represents a double top breakout point. So it's not 107 flat itself for me. It's more like 107.15. So it's 23.60 retracement. That's a double top breakout point. You've tested the area yesterday and you got rejected from it. You pulled back. So I would view it as, yes, a good resistance area if you have to. If you have to take immediate action. So if you're planning something from 107, I will just wish you luck, because that's a good price. But let's take a look at that gold euro chart. Interesting. Interesting in that we've already covered our bullish gap. We continue to have a pattern of higher lows and higher highs. So what do we have here, guys? We go big picture. If I were to go monthlies, there's not much there. If I were to go weeklies, I can drag some fibs. And what does that give me? Nothing much. An interesting target. 38.2 fib of your sell-off. You've actually gone beyond it. But it seems to me you're forming a double top. Indicator wise, I do have a confluence of shorts in my oh, that's silver, sorry. All right, so where were we? You have half the average daily range for gold euro. The indicators are bearish overall. You're just above your 21-day EMA, which makes it a good bounce off point. So I look at gold euro, and the only thing that I could say is go ahead. Seems to be a very nice setup for at least a quick one. Get to your 21-day EMA at 111.13. So this is a decent pair for me. Gold euro. If you look at the value of this trade, you're talking maybe something worth 1,200 bucks. Well, looks like we're actually easing off your pivot. Of course, we're still just 4 minutes shy of 4 minutes away from your interest rate announcement, which, as we said, we don't expect to lead to anything. Give me a sec, folks. Alrighty. Let's find something else, guys. So yes, gold's interesting. Would really love it if we end the R below your daily pivot, below 1284. I could argue from there. Let's ease down. Let's head for 21-day EMA. Let's head for your 1113 area. Now, I'm not really a strong euro enthusiast. It's just that the charts right now seems to suggest that as far as gold's concerned, a pullback, some euro strength, may be necessary. But for me, any any strengthening that you get out of euro pairs just gives you a better position. Oh, sorry. Let me switch platforms. So where else should we go? Any other euro chart that ought to be interesting? Well, let's take a look at your euro yen. So euro yen has actually had a full day, average range of 113. You've had another 136. You've had 113 already. You actually have hammers. Okay, yesterday was a hammer in your daily chart for euro yen. And what is this chart telling me? Much as I hate to say it, guys, but this one is also saying the potential is there for euro to pick up. You're just below, you're just above S1 at 2631. Indicator wise, we're seeing mixed signals here in the dailies for our picture and hourlies. So there's no big conviction for euro strength, but the ECB could help during its press conference. So that's a choice for us, guys. Very short term. For me, you talk big picture, and I will say take your euro yen up to that 28.51 area, and I'll start selling from there. Well, guys, as you can see, nothing happened with the rate announcement. Oh, sorry, there were other chats that I just saw. EUR AUD. Okay, let me take a look at that, Jen. Oh, I was talking EUR USD when I was saying 107 15. 106.31 is an intraday sell area. Just below that, that's your daily pivot. So just below it, I could sell. And then 107.73 is 21-day EMA. But these are EUR USD. You're welcome, Jen. Well, let me take a look at EURAD since we've already spoken about it, or rather, it's been mentioned. So what's with this chart? It's surprising that your Aussie has been so weak, allowing your EURAUD to bounce the past 2 days. But where's EURAUD now? I'm just below your 21-day EMA. Average range is about 161 pips. You've had 89, so there's room to maneuver. From an indicator's perspective, I'm seeing mixed signals in the dailies. Well, guys, I'm looking at this and I'm really not seeing anything special for ERAUD. Suffice it to say that, yeah, if I were around 40, 43, I'd be a seller. How about jumping in now? Unfortunately, it's pretty close that to some, you may not really get a below pivot sell area. All right, let me go back to EUR USD then. Well, okay. One of the things that I look at is what's your average range for a day and where, yes, MRC, it's a sell from the pivot if you actually get there. Pivot for me is at 106.31. S1 in pivot is at 105.55. So I would consider seriously closing out some of those cells once you get to that 105.55 area. Oh, okay. Let me get back to that after this. um, my projected low for the day, pan and fire, is actually 104.99. So that's about your 105. That would make a good target. Of course, what's probably in people's minds is, can we finally push below that prior swing lows? Hey, thanks, Admin. So let's go EURAUD, folks. Yep. EURAUD, as we said, we're only seeing half of the average range. I could play with a short coming from your daily pivot. Your objective would be to try to see this down to that 37.81 area in time. Projected low for today is about 38.52. We have to remember, folks, that as far as your Aussie is concerned, there's really no big reason why it should be weak. So if that's the case, there's plenty of room for Aussie to gain ground against your euro. So for Aussie, yes. Let's consider your daily pivot, 39.52 as a sell area, 38.88 as immediate objective, projected lows 38.52. But I would say even look for even more. Go look for a push for new swing lows in the big picture. Go look for a push through the 37.26 threshold. All right, guys. Like I said, this isn't really one of those exciting ECB announcement, unfortunately. Anytime you see euro picking up, we can always start thinking, can I build some shorts in my euro? There's no reason for us to expect any long-term recovery in your euro just yet. And as far as the ECB press conference later is concerned, we might see a bit of upside for the euro once Draghi talks about the immediate positive impact that he's seen. Lower yields certainly is part of it. But in the end, we're still calling it a bear market. We're still calling for euro weakness. We're still looking for a sell on rallies. So guys, I'm afraid we run out of time. Thank you for joining, and yeah, hopefully next time it will be more interesting. Oh, by the way, see you for our webinar next week, folks.